Hey everyone, this is your stock market recap for September 6, 2011. My name is June, and here's Chris.
Hi, everybody.
All right, go ahead and get started.
Sure. Let's take away from what happened today. And today we formed a nice bullish candlestick reversal pattern. If you guys know what that is, that's a hammer. And that's where it opens, sells off, and then bulls step back in and rally prices up even higher to close near the open or the top of today's session. So we actually got a clue that bulls were buying in the market, especially at the bottom of this not wedge, excuse me, channel that we drew. So we have some very nice bullish reversal pattern at the bottom of this channel. And we've got that before too. We got Morningstar right there. We've had a piercing pattern, bullish engulf back there. And now we have a hammer. So it keeps this channel alive. Now, as with all candlestick patterns, we always still want to see a follow-through, usually by a move above today's high. If we can get that, then we know that we'll probably get another bounce up higher. Now, if that bounce up higher is going to hit to the top of the channel, it's unsure because it could come up just to the 50-day exponential moving average, which has proved to be resistance before. And if that still holds a support, then the market can get another move down. But overall, the market's still really in a choppy range bound. It's in a channel sloping up, but it's just basically chopping around. Now, if you want to be bearish, it's probably going to be a close under the bottom of this channel. And if you want to be more aggressive, then aggressive on the bearish side, then it'll just be a move under today's low. But even if we get that move under today's low, we're going to hit some support around the 1120 level, which there's been about three candlestick patterns confirming that level. So overall, we're just trying to create a game plan right now of what the market might do and how we will react to that. But that's all we can do right now. Let's go into the hourly view. All right, well, we can see that we had a pretty intense selling the first hour of this morning. And it really it hit that bottom of the channel just so perfectly. And then what we wanted to see was prices to move under the first hour's low for confirmation on the bearish side, but we didn't get that. And stochastics was getting very oversold. So when you have stochastics getting oversold, no bearish follow through at a support level, the bottom of that channel, then there's a good chance prices are going to probably bounce up from there, at least just to help relieve that oversold conditions, which is what happened the rest of the day. Now it's because of we look at the bigger picture, and that's this channel, and we can see that prices have been moving in and out of the hourly EMAs, which is another sign of consolidation choppiness. So it's really too rough to say right now if prices are going to rally up higher to the 20-hour EMA and that, or the 50-hour EMA, and that might hold as resistance, and then for the markets to move lower to the bottom of the channel. It's really too early to be deciding something like that. So we're going to have to just because of this consolidation range, we're going to have to wait and see. That's what we usually do during consolidation ranges. We don't force any trades or anything like that. We wait to see what happens for a clear direction of where the market wants to go. So we're going to have to wait and see what happens at these hourly EMAs and how the market behaves above, there. If the market rallies up to them and it holds its resistance and it pops back down, then we know it's going to hit the bottom of the channel again. If it closes above those hourly EMAs, then we know that there's still a pretty good pop up left in the market. June, do you have anything to add?
Yeah, I think you brought up a good point. Is moving averages are indicators in general, especially like moving averages. We love to use moving averages, but they only work well when something is trending like this, right? When you see it's trending, it's acting very well as resistance. But once it stops trending, like Chris mentioned, it just goes in and out and in and out. So they become less reliable, and that's where you have to understand when to use indicators like moving averages and when not to. And when the market's very choppy, moving averages really mean nothing because they can just go in and out of them. Whereas when it's trending like this, just like I mentioned, it can act as very strong resistance or support depending on if it's a downtrend or an uptrend. So right now, I really won't rely all that much on, let's say, like a pullback to the 20-hour or the 50-hour because it's proven unreliable before. So the main thing is what we can use are support and resistance level, and we know that we have a pretty decent sized gap up here around the 1190, 1200 level, so that can act as resistance. But more importantly, I think today's low could mark as an important turning point, so to speak, because if let's say, let's say we think that this was the first leg down. Okay, this is just my theory. If we have finished correcting, and this is the first leg down, we might get some kind of a weaker bounce, and then from there it can break this channel right here. Okay, so I think if you are super aggressive, you might consider, if let's say the market gets any higher, maybe back up to this gap or near this gap, you can consider some shorts, but that's being very aggressive. Okay, for us, we would rather wait for some kind of a break, either a close outside the channel, a break of this is 1140, which is today's low, as a stronger confirmation. At least I would sleep better at night knowing that it broke the channel and I'm shorting the market. Okay, but if you decide go in early, you can use a break outside or below today's low as to add on some more, right? To add on to more positions. Okay, so anytime you have a strong move, just like this, anytime you have a strong move or move, you get some kind of a bounce and then it goes lower, right? And then it gets some kind of bounce and then it goes lower. Get some kind of bounce and gets lower. So that's how trends get defined, right? Lower lows and lower highs. But once we start seeing something different, then that's a change in trend. But right now, it's still lower lows and lower highs. And so far, that means the current direction of the market. It's still down overall, but right now we're in correction phase. And correction phase, as you know, can get very choppy. Who knows, right? We could still end up coming back here and just continue chopping in this channel. That can still be a possibility, right? Don't ever rule that out until it's proven wrong. And when it's proven wrong, that means it's coming out of the channel. That's when it's no longer range bound. But right now, it's still range bound. So trading continues to be the same story for this past month, which is continue to be light and never stay too one-sided in any one side, both long or short. And also, if there's profit to be taken, take that profit. Let's move into some stocks, or unless you want to say something else.
I just wanted to just touch on, it's just really awesome that me and you both have different types of, or game plans for when this market does make a clear direction of where it wants to go. And that's something that's very important when markets are basically choppy and consolidating, that you want to have a game plan. Okay, if it goes in this direction, I'm thinking about this. If it goes in that direction, I'm thinking about doing this. It's just one of the ways that we try to stay one step ahead of the market.
Yeah.
So let's check out Apple. I really like Apple because it formed a nice bullish engulf pattern at the 50-day exponential moving average. And, it is a really big white candle, so you're like, oh my gosh, how can I get into Apple? Especially, the first target to the upside would be like 390 or so. And one of the ways I'm looking to play this is if it gets above today's high or a move over there. I was looking at the chains for Apple, and actually the 385 out of the money weekly, September weekly call options, they're about $2.37 right now. Now, if Apple makes a move above today's high, they're probably going to go up higher. I can't give an exact estimate, but they can maybe go to maybe, for the sake of example, maybe $2.50 or maybe higher than that. And if Apple continues to move up and hit our target of around 390, those things are going to double in profit. So you'll probably make like $2 and some change. And one of the ways I look to the risk of this is probably maybe half. If I lose half of the value of my out-of-money call option, so let's say you bought it for 250, then maybe it loses half of its value, then you can get out. But you're still risking about such a low portion compared to the reward. And this is just something more of a day trading type of thing for a lot of our traders that like to want to get into some big name stocks, but sometimes it's hard because you don't have the capital, especially if you look at Apple's call options that are not weekly, and those can get very expensive. So that's just one way that I'm looking to play Apple. Next stock that I still like is GDOT, GDOT. And we're still banking on this type of changing trend. If you could draw the following resistance line, June, and then it actually broke above it. I was kind of hoping longer term.
Like all the way back here?
Yeah.
Okay. Yeah, nice retest.
That's what I like that. Nice bullish engulf pattern today. So I'm still long in this stock, and I'm probably thinking about adding more positions, especially with that nice bullish engulf pattern, confirming that support level. And if you want to just go on a quick trade, $35 first resistance level, that's still pretty far away, so it's pretty good risk to reward ratio. For individual stocks, that's about it. I'm trying to look for some bearish stocks, but I haven't really found any, and I don't feel like forcing them. But if you guys have found some bearish stocks, that's not a bad idea either, especially when conditions are like this. And you've heard me say probably that I like to have one call or one bullish trade and one bearish trade, something to even out my portfolio. But if we go into the VIX real fast, and the VIX had a really nice pop up today, even though it formed a black candle, so volatility is starting to pick up a bit. So if you guys are looking at some credit spreads on some certain stocks, things like that, those would actually be pretty good ideas still as volatility goes.
Okay. Well, I mean, as for me, there's I still look at the strong stocks, and I look at what's potential. I mean, if we look at the market, assuming that we might get another day or two worth of bounce or consolidation, then you have to look at, okay, strong stocks like GMCR. If, let's say, I were to buy tomorrow, what will be my target? Maybe the previous high of 110. And so you have to ask yourself, is it worth going into? Assuming, like for me, my mentality is if I'm going to buy something or go long, it's probably not going to be more than for 1 or 2 days. And so you have to look at stocks that have some pretty clean setup, and I think GMCR has that clean setup, especially a break above 107.50 right here. Okay, so it made a nice pullback, and it looks like it's ready to move higher. I mean, it's only one of the few stocks that looks really good. Dollar Tree, also DLTR, good bullish engulf back here, back at this previous support, right? Almost a double bottom, right, so to speak here. Okay, so these are patterns, and we've mentioned this before. They're like keep an eye, clean up your watch list. Right before the long weekend, we said clean up your watch list, look for things that are working, meaning that are still in a nice uptrend, and you can see that this thing is remained green despite a red day. Okay, so GMCR was also green, right? So you have to understand these are stocks that people are wanting to buy, and anytime there's a dip, right, anytime there's a major sell-off, and these things tend to hold or at least attract buyers, and you can see that's why these things are still holding up very well, right? Like Hansen, okay, holding up very well. Not as clean as the pattern before, right? It's a little bit messy around here, but I still like to keep this on my watch list just in case. Now, what I'm looking at for tomorrow, I've already mentioned as far as GMCR, but also here's another one, ARCO, ARCO, made a nice pullback towards at least towards the 20-day moving average or some kind of support. You can see there's like some prior support here. Very nice looking hammer. So if you can get above today's high, and that's basically the name of the game, is getting above today's high, then I would shoot for at least 50 cents, maybe a buck, right? So nothing more than, I'm not going for, you know, a couple of dollars here, depending on the stock, but I don't mind capturing at least $1.50 maybe. But once the market looks like it's ready to roll over, then I'm definitely exiting these stocks. There's no way I'm going to be holding these things for a week or so. And let me give you one more that you guys mentioned on the forum. Someone mentioned this, and I think RIM, I mentioned before when it was up here, when it pulls back to 30, and if it holds, then that looks like it's a good rebuy back into this stock. And it seems like today was the case. Pretty nice looking, I guess you can say, piercing pattern, okay? But the main thing is that it's holding support around this area. So above today's high, maybe even try and close this gap, that would make for a nice quick target. So quick targets, that's all I'm aiming for. You know, I'm taking like jabs at the market, not really, you know, swinging, making these big punches, but just little jabs at the market. And so that's really how I'm playing this market right now. Just taking the profit, even if it's like a quick day trade. You know, I'll buy something in the morning and I'll sell it near the close, for example. Right? That's really what I'm doing right now in this market. Until we get a break of this channel, then maybe I can start loading up on more puts or shorts or whatever the case is. But right now, you just got to look for the clean setups, the easy setups, the strong stocks. On any potential market rebound, those would be good to buy. Right? And that's pretty much it as far as like trading strategy in this environment. Anything else you want to go over, Chris?
No, we covered a lot. Again, I know I always say we covered a lot, but we always do.
Well, I think during times when the market isn't really doing much, this is where you have to really test your patience, most importantly, because a lot of times you're just sitting there, you're falling asleep watching the monitor, and this is where being patient, and this is testing you as a trader of being disciplined, and you know, rather than trying to force trades out there, you just got to be disciplined, stick to your setups, rather than trying to find or tweak your setups. I think if your setups has been working before, it should continue to work, you know, given the current market conditions. So stick to it. All right, then we'll continue to talk again on Thursday. All right, have a great one.